Hello everyone and welcome to our Friday, August 24th edition of Trading Software Demonstration. I'm Jason Galano. I'm an account manager with FXDD. I've been with the company for 5 years. We're going to get started in just a few minutes. Before we get started though, I just want to briefly mention our disclaimer. Our disclaimer is that we do not give buy, sell, or hold recommendations and that trading is risky. You want to make sure that you're trading only with risk capital that will not affect your lifestyle. And also that the information contained herein is for educational purposes only and is not meant to be construed as any type of trading advice. So without further ado, let's go over to our MetaTrader, and what we're gonna cover today is basically how to set up a workstation and how to put some of the most commonly used Forex tools on your charts. And if anybody has any questions, how's that, Larry? Can you hear me better now? Okay. Thanks for the feedback, Larry. Definitely appreciate it. Okay, so what we're going to do is we're going to go to our MetaTrader. Okay, so I currently have the MT4 set up like this. Now, if you're any type of a diligent trader, what you're going to want to do, first of all, is open up more than one chart. You don't have to have them showing all at once, but a diligent trader always does their analysis across multiple time frames. So what you may want to do is have one, short-term time frame, one medium-term time frame, and one long-term time frame. So what we're going to do first is we're going to open up multiple charts, and we'll work with the euro for now. So let's go ahead and do that. The way we open up multiple charts is we go ahead and click File and then New Chart, and we'll go ahead and we'll choose euro dollar again. Right now I have a euro dollar 5-minute chart open, but now what you'll see happens is we get a second tab on the bottom of our charts. And this is a euro dollar 1-hour chart, and that's exactly the way we'll keep it. But let's go ahead and modify it so that it fits our trading needs. We're first going to zoom in a little bit by clicking the plus sign with the magnifying glass with the plus sign in it. That's going to zoom us in just a little bit, and then we're going to change it. You notice that as we zoom in, it becomes clearer and clearer that this is a bar chart and not a candlestick chart. So the easiest way to change it to candlesticks is by clicking the candlestick button right here. And here it is. And then what we'll also do is we'll click the chart shift button, which will, what that does is it moves the rightmost candles away from the y-axis or the price axis or whatever it is you want to call it, so that it leaves room for us to sort of conjecture as to what's going to happen next. So if we go ahead and click this button right here, this is our chart shift button. So we click that and we notice that there's a wide open space that opens up right here. Let me just go check to see if that's what we have. Okay, we already have that on the 5-minute chart. So this chart looks okay for now. I mean, what I like to do personally is I like to remove the grid from my charts. Very easy to do that. I find the grid is sort of distracting in a way. If anybody's curious as to how to do that, you simply right-click on the chart, and then you see this little menu pop up, and you'll see grid right here. If you click grid, it'll get rid of the grid, and now you have just a blank chart with the candles on it. And we'll do the same thing with our 1-hour chart. Let's right-click and then do away with the grid. And then let's do this one more time. Let's open up our long-term time frame chart. Let's go ahead and click File and New Chart one more time. Click euro dollar. And here we go. Now we have another chart. Now you'll notice that this one opened up as a 1-hour also. Now what's the quickest way to change a time frame for a chart? You see up here in the right above the chart, you've got our periodicity the toolbar window. This lets you quickly and easily pick between different time frames. Daily is represented by D1, so we'll click D1, and instantly it'll change to a euro dollar daily chart. And once again, we'll zoom in a little bit by clicking the magnifying glass. And as we see, it comes up as a bar chart. So let's change that to candlesticks one more time by clicking the candlesticks button. And then the chart shift button on the right will bring us all the way to the present. Well, it'll open up the space between the most recent candle and the price axis. So now what we have is we have three charts open. We have a euro-dollar 5-minute, a euro-dollar. Oh, let's also get rid of the grid. My apologies. Let's right-click and then click grid. And now we've got three time frames. We've got one currency pair with three different time frames open at the same time. Okay. So the next thing that we're going to want to do, well, the next thing that I'll show you to do is how to put some of the most commonly used Forex trading tools on these charts. And we're going to start with a moving average. What we'll do is we'll go to the navigator window on the left side here. And we'll scroll down to where it says moving average. And we'll click and hold down on it with our left mouse button. We'll wait till it's highlighted in blue, and we'll click and hold down with our left mouse button, and we will drag our mouse cursor over to the right, and when we're ready, we just drop it on the chart. Now the next thing that you'll see is you'll see this box pop up, which lets you modify your parameters. The thing that you're gonna, that you'll most likely be modifying is your period. So basically, the two most commonly used moving averages in Forex are the 100 time frame and the 200 time frame. So let's go ahead and put in a 100 time frame, and let's make that red. Keep it red. So we'll go ahead and click OK. And then there's, well, before we even do that, there's we usually, for the purposes of this webinar, we're going to leave it on a simple moving average. A simple moving average, some of you may have heard that there's a lot of different moving averages, and you can see right here that yes, there are. The two most common ones are simple and exponential. Simple is just an average of the last 100 periods, the last 100 ticks. So what would a 100 time frame moving average be on a euro-dollar daily chart? That means it's the average close for the last 100 days, and that's it. It's just an average. The exponential gives more weight to certain ticks. So, it's a little bit more complicated. Right now, we're just going to stick with the simple. So we'll go ahead and use simple. We'll apply it to the close, and we'll click OK. And now we have our moving average on the chart. And we'll also throw in one more, just for the heck of it. Let's go ahead and put in a moving average again. Same procedure. We left click and hold down our mouse button, move it over to the right, and then drop it on there. But except this time, we're going to change the period to 200. And we'll change the color as well. We'll make this one blue so that we can tell the difference between which one is the 100 and which one is the 200. Everything else will stay the same. So now what we have is we have two moving averages on the euro-dollar daily chart, and we'll do the same thing on the 1 hour chart. Let's go ahead and do that. Again, if anybody missed it, all we do is we click and hold down our left mouse button and then drag and drop it on the chart to the right. We'll put in a 100, and we'll make it red. And then we'll do the same thing, click and hold down. Whoops. Drag and drop. We'll make this one 200, and we will make it blue. So now we've got it on the 1 hour chart, and we'll, last but not least, we'll do it on the 5-minute chart as well. Okay, so now we've got all of our moving averages on here. Now, how is a moving average usually used? A moving average is normally used as to denote bias in the market. If the market is above a certain moving average, that's normally meant to convey a bullish bias. So what normally happens is traders a lot of times will use a moving average as a buy or a sell signal because it denotes bias. And say if it's above the market, it's a bullish bias. If the market is above the moving average, it's a bullish bias, and below the market, it's a bearish bias. A lot of times, traders will use a break of a moving average as either a buy or a sell signal. Now, does that always mean that the market is going to clear? I mean, usually what happens is when the moving average is broken, that the market should continue to either the downside or the upside. But does it always happen? No. So you always want to make sure that you have a protective stop in there as well. Okay. So now let's, and we can see the same thing here. On the 1 hour time frame, you can clearly see that the euro dollar has a bullish bias because it's above both moving averages. So, if you see that the currency pair is moving towards a moving average, you could either use that as possibly a potential support area, because a lot of times the moving averages do act as support and resistance. You can see that if we go back a little bit further with this chart, let's take auto scroll off for a second. Now, just as an interjection, we can take auto scroll off by just clicking the auto scroll button, which is right next to the chart shift button. And what that'll do is that'll let us go back in time. So you can see right here, back on this, between the 17th and the 20th of August, the moving averages converged, and they provided what looks like to be support, because as the market tried to break through, but it was unable to do so. It tried here. It did stay down there for a few hours, but ultimately it was not able to break through to the downside as many traders might have anticipated. A lot of traders may have been looking at this and saying, "Hey, I'm going to sell because it's crossing below the moving averages." But a lot of times, like I mentioned just 5 minutes ago, the market does not always do what it's supposed to do. So you always want to have a protective stop in there in case you're wrong, so that in case you're wrong, you don't blow up your account and you don't risk too much on any one specific trade. But anyway, the market then proceeded to go to the upside, and it kept rising and rising and rising. So you can see here that the moving averages did provide support, and which a lot of times they do. They provide support and resistance. If we look at it on the euro dollar daily chart, long term, it looks like the euro dollar bias is to the downside because it's below both of these moving averages. But you can also see, classic example again right here. If we take a look back in April, it was using the moving average as an area of resistance. Did it break through to the upside? Yes, a little bit. And were there probably some intraday trading opportunities to be had there? Of course, there's always intraday trading opportunities. But eventually, it didn't even make it all the way up to the 200 time frame moving average, so it just ran out of steam. And then it went down, and it continued to stay below the moving average line. And only recently has it come back up there to test the 100 time frame moving average. So, is it possible that it could break the moving average? Yes. And is it possible that that could be a buy signal? Yes. Will we know for sure until it happens? No. But, in either event, what you want to do is you want to have a protective stop. So in case that you are wrong, like I said, you lose a little bit. And, you always want to make sure that you have some profit potential in your trading as well. Preferably several times that of the amount of pips that you're risking. The good thing about, the strength of the moving average that a lot of the other trading tools don't have is the fact that it's an average price. Everybody, like if you put the moving average on a daily chart and another trader in another part of the world puts the moving average on a daily chart and 10 million others do the same thing, you're all going to see the same exact line, because it's just an average of what the actual price was. So there's no ambiguity in the moving average. So that's definitely a strength. And you may want to consider, using the moving average, as part of, do you necessarily, everybody has their own specific trading style, but the moving average definitely it's a strong tool for determining bias in a Forex pair. So let's go ahead and move on to another trading tool. And this one doesn't even involve an indicator. This one is simply a trend line or support and resistance lines. Let's go back to our 5-minute chart. And what I'll do is I'll show you how to put a trend line in on these charts. What we have right here is we have a diagonal line in the toolbar, and we're going to go ahead and click this diagonal line. And we're not going to click anything until our mouse is specifically where we want it to start. So we're going to start it right here. We're going to use our crosshairs. What you'll notice is that when the trend line tool is selected, that there is a crosshair alongside a diagonal line, that appears instead of just your standard arrow. So that's how you know that the tool is selected. So once it's selected, you move your mouse cursor to where you want the trend line to begin, and then you click and hold down your left mouse button, and then you just drag it out to where you see. I mean, the thing with trend lines is they are visual and they are in the eye of the beholder. No two people are going to have the same trend lines. This one may not be entirely accurate, but this again is just for demonstration purposes. So that's how you draw a trend line on an MT4 chart. Now, what are trend lines normally used for? They're also used to determine bias. So basically, potentially what we see right here is we see a trend to the what we see is a trend to the upside, even though the market is between the two moving averages right now, which denotes that it's at rest. What we most recently saw is a trend to the upside, and you'll see that you could argue that the trend line was providing some sort of support as well, because during this entire period it was not able to break through this trend line to the downside. It might be showing signs now of going through the trend line, but a lot of times traders will use the trend line as a sort of a buy or sell signal. If the market stays above the trend line, they'll look at that as a bullish bias, and if it falls below a trend line, the bias suddenly changes. But you've also got other things to consider. Like I said, on this moving average, on this chart right here, you've got you've got the price between your two moving average lines, and that usually denotes that it's at rest. So you want to consider the trend line as well as any other trading tool that you use in conjunction with each other in order to determine what you think you should be doing as far as buying or selling is concerned. So let's go ahead and let's eyeball a trend line on here as well and see what we can do on the 1-hour chart. Start here. See, what we can see right here is that we clearly have right here another trend line where basically it was unable to break through. The market has been unable to break through to the downside past this trend line for quite a while, dating back to August 20th. Has it broken through recently? Yes, it has. But did it stop at the moving average? Yes, it did. So could it be on its way back up again? Yes, it could be. I mean, we'll just have to wait and see. But again, you could have used this possibly as a short-term trading opportunity. How many pips would you have, where it's, were constituted themselves as profit potential right here? It's about 75. It's about 70 pips right here. So if you sold on a break of the trend line, you would have made about you could have made possibly 70 pips. So that's just another indication that that a trend line could prove as a very useful tool. And then last but not least, right here, it looks like we've got a downward bias on the euro dollar right here. So let's go ahead and eyeball a potential trend line. something like this right here. What you've got is you've got a break to the downside, and a couple of times the market tried to test the trend line, but it was unable to break through. And then eventually, look what happens. It goes back to the upside, it breaks through the trend line. And look at how many pips we could have made here on a break of the trend line. This is a good 300 pips or so. So these are just things to look for, with these trading tools. You definitely don't want to just, you want to use unambiguous trading tools that that confirm a bias when used in conjunction with one another. You don't want to just simply have a chart with no trading tools on it, but you also don't want to have a chart on it with too many. Too many trading tools will definitely just confuse you, and it will, it'll just drive you nuts. It'll just basically, this indicator is saying that I should do this, another indicator saying I should do that, this one's saying that it's somewhere in between, etc., etc., etc. So you want to keep it as minimalistic as possible, but you also you don't want to be left with, you don't want to have nothing in your arsenal. So the last thing that we're going to go over is the use of a Fibonacci tool. And again, if anybody has any questions at all, please put them in the question panel. I'll do my best to answer them. So how do we apply a Fibonacci tool on the MetaTrader chart? Basically, what we have right here is we have in that same toolbar that you see the trend lines and whatnot, you'll see a couple of dotted lines with an F next to it. That's our Fibonacci retracement tool. So what we'll do here is we'll click this tool, and the most common way to use a Fibonacci is to take it, to start it either as in an uptrending market, which is what we have here on the 5-minute chart. We have it as basically right here is we start at the swing low. We'll click and hold down our left mouse button, and we'll carry it up all the way to the swing high, which is the candle with the highest high. So we're connecting the lowest low with the highest high in an uptrending market. So again, I'll do that one more time. Let's go ahead and delete this, and I'll show you how to do that one more time. So we'll use the Fibonacci retracement tool, and again, we'll click and hold down our left mouse button, and we will drag it all the way up from the swing low to the swing high. And there it is. Now, what is a Fibonacci? A lot of you may be unfamiliar with what a Fibonacci is meant to, it's meant to show you. Fibonacci is meant to show retracement levels. You don't use Fibonacci's in non-trending markets. You use them in trending markets, like what we saw here. We had a nice little move to the upside, earlier today in the euro-dollar pair. So what the Fibonacci tool shows you is possible areas of retracement, possible areas where the market could retrace to, and then either break through or continue, bounce off of it, basically. So what you have here is we saw the uptrend, and then look what happens. It comes all the way back down, but where does it stop? It did retrace. What level did it retrace to? It retraced to the 38.2% retracement level, and it's currently finding support at this 38.2% retracement level. And you've also got a moving average in the area, which also can provide us support. But you'll notice that now it's between the 38.2% retracement level and the moving average. So, it's denoting that that's possibly denoting that the market is at rest. So basically, that's basically what your Fibonacci tool does. It gives you possible areas of retracement. There's 3 most commonly used levels. It's the 38.2% retracement level, the 50.0% retracement level, and the 61.8% retracement level. Again, those are the most commonly used levels, and there's no telling which area, where the, and again, there's no telling beforehand which level the market will eventually stop at and find support at or resistance at, or if it'll even stop at all. It's just, a lot of times, more often than not, it does stop at a specific level, so it helps to be able to visualize those levels on your chart. So we'll go ahead and do the same thing on our 1 hour chart. We've got another Fibonacci coming in right now. Here we go. And you'll notice right here again, it stops at the 38.2. I mean, it had a tremendous rally upward over the last couple of days. But where does it, when it retraces, which eventually all markets do, you can't just, no trend lasts forever. But where does it find, when it finally does begin to retrace, where does it find support? It finds support at the 38.2% retracement level, right here, which also lines up with this moving average. So what did it do? It bounced off the 38.2% retracement level, and now it's stuck in the middle of the 0 and the 38.2. I mean, the next move is anybody's guess, but just, again, this is just to illustrate the fact that the Fibonacci tool does, and if you even look, I mean, the real proof is that even before it reached its high point, you can see that the 38.2% retracement level was even providing resistance up until a certain point. You can see all throughout here that it was providing resistance. So, the commonly used saying in Forex is support becomes resistance, resistance becomes support, etc., etc., etc. And what happened in this case? Resistance, this whole thing, oh, sorry about that. This whole area right here, this 38.2% retracement level right here, became support over here. So again, that just shows you what Fibonacci used in conjunction with a trend line and moving average can produce for you. It can make things a lot more clear. And as traders, we're all striving to receive some sort of clarity in what we think the market is going to do next. We're looking for clues, and these tools, more often than not, can indeed provide those clues. So that's going to be all for today. I do want to thank everybody for joining me. Let me just go ahead and answer a couple of questions that came in while I was speaking. Now, Larry's asking, how do you get the price at those levels? Okay, that's actually a very good question, Larry. I'm glad you asked that. There's actually a very neat trick with the Fibonacci's that I wanted to actually. I mean, it must have just slipped my mind. But what I'm going to do is I'm going to show you in the Fibonacci tool how to put prices on those levels. As you notice right here, let's go back to our 5-minute. What we have right here is we have our Fibonacci, but all it shows is the levels. It shows 0.0, 38.2, 50.00, 61.8, and 100.0. I mean, it would be nice to have the prices in there as well. And there's a very neat trick for being able to do that. So what we'll do is we will double click on this dotted red line, and we will right click on once we see that these little white dots pop up, that's how we'll know that we have the tool selected and we can now manipulate it. Say, for example, if we wanted to drag it around, we could do that, but that's not what we're going to do. We're going to right click on one of the dotted lines, and we will go to Fibo Properties. And then what we'll do is we'll stay in the Fibo Levels tab. But what we'll also do is we will double click. Here, I'm double clicking right now on this 0.00. We'll click one more time to get the blue highlight button to disappear. And we'll put a space with our space bar. And we will go ahead and type in percent and then $sign. And we will do this for every single level that we see on here. So let's do the same thing with the 38.2%. Double click, we'll notice that the 38.2 gets highlighted in blue. Let's click one more time to get rid of the highlight, space, and then percent $sign. And we've got 2 more levels here as well. Let's go ahead and do the 50.0. Double click on 50.0. That will highlight it in blue. click one more time to the right of it. We'll get rid of the highlight. Go to type in $dollar sign, excuse me, not %4. And then we'll do this one more time. Let's go to 61.8%, space, $dollar sign, not %4. And then we'll do it lastly for the 100%. $dollar sign, not %4. So let's go ahead and click OK and see what comes up. And voila, what do we have now? We've got our prices lined up with those specific levels. So that definitely comes in handy when using the Fibonacci tool, because you don't want to just sort of eyeball it and then sort of approximate. You want to try to be as clear as possible as to what price it's lining up with when you place it. So that's definitely a good, a good thing to take advantage of, and I want to thank Larry for bringing that up. Nick, your question, you're looking for a webinar on how to place an order on the MT4 platform. I'm glad you asked. I did a webinar a few weeks ago on MetaTrader 4. If you want to email me, it's jgalano@fxdd.com. That's J as in Jason, G as in giraffe, A as in apple, L as in lemon, A as in apple, N as in Nancy, O as in orange @fxdd.com. If you want to just send me an email, I will send you a reply email with the YouTube link for that specific webinar, and that goes over in detail how to place trades. So if that's all the questions that we have for now, yes, I'll go ahead and repeat that, Nick. It's J as in Jason, G as in giraffe, A as in apple, L as in lemon, A as in apple, N as in Nancy, O as in orange @fxdd.com. That's F as in Frank, X as in X-ray, D as in David, D as in David. So if you want to just send me an email, I'll go ahead and send you a reply email with that specific webinar link. So again, I want to thank everybody for joining me today. We're going to go ahead and return to the same topic next week, but on a different platform. I'll show you how to do all this on another platform in case anybody is interested in checking out the other platforms that we do have to offer. Thanks, everybody. Have a great day.